May recorded another rate rise, and the official cash rate now is at 3.85%. Honestly, I was a little bit surprised to see another rate rise after a pause in March. That's obviously bad news to many homeowners. However, it's not bad news for the property market. The Australian property market proved to be resilient to interest rates not only this year, but over the last 50 years. So in this video, we discuss proof that it has been resilient, why I am buying another property and add to my portfolio this year, and what my cash rate predictions for 23-24. Let's get into it. The last 3 months have seen property prices increase in most states, and this growth was led by Sydney. Sydney is the one state you need to carefully watch as it tends to lead the pack. Sydney recorded a 3% capital growth in the last 3 months. Now here's where it gets a little bit more interesting. Sydney average property values dropped 13.8% from the peak, and right now it has increased 3%. So this is a 21.7% recovery from peak to trough. So if you've been distracted by media headlines, you're probably conditioned to thinking that higher interest rates mean lower property prices. But in reality, this isn't the case. Every time we witness inflation, property prices go up. And we have 50 years of data to prove it. Clearly, higher inflation and higher interest rates don't control property prices. They do have an impact, of course, but higher rates don't automatically mean lower property prices. Higher rates affect our borrowing capacity and limit our budgets. But clearly, growth can be achieved, and we have 50 years of data to prove it. I purchased my most recent investment property back in 2021, and one of my goals for this year is to acquire another asset for my property portfolio. I believe property prices will never be cheaper than what they are today, and we are looking down the gun barrel of some serious property growth over the next couple of years. This growth is attributed to many factors, but here are the main ones. Population growth equals demand growth. And we are expecting 650,000 migrants to come into the country. Now, most of these migrants will rent for a while, and some of them will be cashed up and ready to buy a home ASAP. And their visa will allow them to do that. Let's assume 5% of those 650,000 migrants coming in are cashed up and ready to buy. That is 32,500 first home buyers added to the buyer pool. In a good year, the number of first home buyers is around 140,000. So between 2023 and 2024, we can expect that home buyer demand to increase at around 23% as a minimum. And speaking of buyer demand, a large number of those 650,000 will rent a place out for a while. This will only exacerbate the rental crisis that we have in Australia right now. If you want to find out more about the rental crisis, check out this video. The increase in rental prices will entice many property investors to get back into the market, which will only add fuel to the fire. On the other hand, on the supply side of things, dwelling approvals have been on a steady decline since the end of 2021. Dwelling approval increase or decrease are felt a couple of years later. It takes a year or two to build a house or a unit. So the supply side of things is actually making things harder for the RBA. Even Philip Lau said on many occasions that he can't fix the supply side of things. This is in the hands of both federal and state governments. Moving on to rate predictions for 23-24. Once the RBA's job of curbing inflation is done, they can look at cutting rates. Here are some of the predictions by major lenders. Some major lenders are predicting rates to be below 3% in 24. Whether this plays out or not, we are expecting growth due to other factors that we mentioned earlier. But if this does play out, then things are going to heat up real fast for our property market. We are feeling very confident that cuts are coming because major lenders have already slashed their fixed term rates. If they were not confident with rate cuts happening, they would not have done that already. I had so much fun recording this video and researching the data. I want to end with a saying that my boss back in 2013, who introduced me to the property market, what he said to me at the time. That was 2013, but it can apply to any year. And here's what he said. If you bought a property in 2013, or let's just say in 2023, in Australia for $500,000 and you can comfortably afford the property, how can you go wrong? Thank you so much for watching, and I'll talk to you again soon.